All right, all you devils out there, happy Friday. Sam here with you. Oh, it's Friday the 18th of February here. So, of course, we're going to get a look at Bitcoin. I suppose we'll start here with the kind of macro big picture here on the Elliott count here, and then we'll dig down here to some smaller time frames, see if we can make sense of this. Now, as we look here, again, take note here, I'm on the Brave New Coin Liquid Index, so this will likely not match tick for tick with any trading exchange that you're working on. So just bear that in mind. But for our broader structure here, this is certainly adequate. Now, of course, we're all watching the volatility in the market, and market sells off. Is there enough here to change this count? Well, I would suggest no, although we may end up getting to our destination, assuming, right, emphasis, assuming we're going to stay with this triangle here. We may end up getting to our destination here a little bit differently than we originally thought, although it's starting to make some sense. Oh, let's see. Let me stay out here and let's just dig in here a little bit. Now, we had considered with the price action that was underway that perhaps we'd get here. This our target being up here, right? Is the high probability zone for a D between the 50 and the golden zone. That we might get there via a zigzag. Well, that is starting to look less and less probable, although at the end of the day, really all we're after here is a 3, right? So if we were going to do a 5, 3, 5, no, prime, just fine. Looks like we may end up doing it here as an ABC into a W, ABC into an X, and then we'd be anticipating an ABC into a Y to give us, in effect, our 3 there to then start down for the 3 and the E and then free to fly. Now, there's no obligation, of course, for the market to do that, right? Market's going to do what it's going to do. We're just trying to look at this pattern here and say, okay, based on this current price action here, can we get an edge, right? That's all we're after. That's the most we can ever hope for. And it may actually not be an edge, but it may be an edge in our own mind that would give us the conviction to take the trade. Now, win, lose, that's another story. But you have to believe you have an edge. Otherwise, you're not going to take a trade, right? You're just going to sit and watch. So can we find an area where we think we've got enough of an edge to warrant the risk reward? Right? Let's make sure the reward compensates us for taking that risk. So if we're going to get, right, so again, just very simply, if it's going to be done via a WXY, it doesn't alter the expectation here. Now, that said, if we start to accelerate here, and this starts to come down more aggressively to challenge these pivots, we have to consider the other alternate that's been here all along, and that would simply be that we're going to do it via a flat. Oh, let's see. So how could I? Oh, here. Let me hide this, and then I'll just draw it here. So we can. Here, I'll just recreate it this way. If I put this here, let's take it out here and match it with that. Oh shit! Here, what did I do? A 2 there, and let's make it solid here. Okay. So you see the potential, right? So I just wanted to. Oh, shit, see, because I'm in log scale, I can't draw a channel. I just want you to see this trend line here, pivot. Like you can't. You couldn't have scripted it any better. Pivot, now pivot. All right. So, but the suggestion would be if it's going to be a flat, right, to balance out here, A, B. Now we're going to come down here. Now could be here. Right, to give us perfect geometry relationship, could be the median line, right? We don't have to. It doesn't have to be a to the tick pivot here. In general, it's the shape, right? Is it a 3? Are we going to go 5 here? Well, there's a way we can get there, and now I have it teed up. Oh, let's see if I bring this over here. Here it is in motive wave. So we can look at how we might get there here, and there's an important level here, because if we're going to do it this way, we would have an invalidation point. Oh shit! Hang on. All right, so here we've looked at this a couple of times. Well, now here you can see the flat drawn here. Oh, shit! I should have just come over here. So in a flat, we're looking for a 3-3-5. All right, so we're going to get to our first A wave via the WXY. A lot of Elliottians disagree with me here. I mean, I'm sure there are some that see the same as I do. It almost doesn't matter because you could put the Y here. You could, right? And then you got your A here. Doesn't change anything. And then you'd go 1 A, B, C, expand to B, 1, 2, 3, 4, 5. You still get to an A. So it really, this is just Elliotticians, oh shit. I mean, it almost doesn't matter, right? At the end of the day, who cares, right? So, I mean, all that matters is, okay, is the broader structure in sync? I just think it finishes better here because of this, but again, it doesn't matter. 1, 2, 3, 4, 5. It gets you the same destination. So that aside, let's focus on coming down. Well, if I'm going to get there, there's this diag here that very well could get us down here. Now, first thing to note, this is not the diag we necessarily hope for here. You'd rather see a contracting rather than expanding, although, again, we kind of hinted at this last week, or hinting, that's the wrong word. Just described my approach to Elliott. I'm not such a purist that I wouldn't call that I wouldn't call that a diagonal. It's a little funky in how we get there. ABC to the 1, ABC, ABC, now ABC. All right, so we have now the potential here for this to play out, but that we have to be very mindful that with 3, of course, can't be the shortest. So we have a long 1, a relatively shallow 2. Okay, we don't go 100% the length of the 1 here. So the wave length relationship is friendly to an ending diag, but the expansion of it is the structure, the geometry of it doesn't quite play perfectly. But my broader point here is because of the length of the 1, we've got to be mindful of when 5 would get longer than 3 is what I'm trying to get to. And that would be at this 100% level here, right? So if it's going to be 1, 2, 3, 4, 5, what is it? 30,855. Oh, I think that's what I've got there. That's 655. All right, a little hard for me to see it. 1, 2, 3, 4, 5 would put us right here in line with the geometry of the flat. Very critical, right? Cannot go any longer, or we'd have to be back here. Perhaps we could recount it. Oh, you definitely could. You'd have to get your 1 up here. Oh, it's not an easy recount, but likely you'd have to get your 1 here. So you'd reduce the length of the 1 and then go into some gyrations here to get your 2. Oh, fuck, I'd have to spend a little time with it. Right now, this is the count that I think is most probable if we're coming down this far, right? If we're going to continue to accelerate down here, and the tension and all the geopolitical tension is going to stay in the background. Well, we are seeing that Bitcoin is not a safe haven. People are not running to Bitcoin to protect capital. They're doing the opposite, right? They're trading it in sync with the NASDAQ, right? So risk on, risk off seems to be where we still are in the broader acceptance of Bitcoin. Still seen as a risk asset. So this sell-off here is, I suppose, not to be, it's not surprising because this is not the first time we're seeing Bitcoin trade in the same direction as the NASDAQ. So that said, this is interesting. Now, I wouldn't, this remains less, let me rephrase that. This remains an alternate, not my primary, and I'm going to show you why, because there's some good things here for the triangle, which would imply there's another leg up before we head back down. So it'd be easier to show it to you than to be rambling on here. So let me get that off to the side here, and let's dig in here. Right? So I think I made the case here. If this is 3, we're looking for another 3 to get up here for that destination. It is interesting how the market is holding this center line here, which this will likely not surprise you. Oh, I think if it's the absolute low. So do you see what we've done here? I know that's a little hard to see. If I here you see here's the golden zone, right? We break it, get back above it. Now what are we doing again? Testing that same area. Now, of course, right, in terms of algo participation, we know, right, with the break here, there's not an algo there at this degree. But it is interesting how that has become the kind of the battleground for trend. All right, are we up, we down? Okay, all right, so we've covered this to death here, but I just thought I would kind of wrap up here in terms of what the anticipation, which would be, if we're going to hold somewhere down here on this retrace, next destination is up, but that is not, the implication would not be we're off to new highs. right? We could not finish it this way with a 3. Okay, so with all that said, where do I want to go here? All right, I got a lot on this hidden over here, so let's just take it one at a time. So in some respects, I wanted to de-emphasize the Elliott because we can see, all right, at the end of the day, it's just a giant sideways, right? We're just going sideways, right? Right, which was all the more why the triangle, in my mind, remains the most probable. Now, what I wanted to do here is just look at this and say, okay, like Elliott off the table, right? So let's simplify. Since the Elliott is implying a bit of a holding pattern, right? As we just go sideways after the massive ramp, right? So now we're going sideways. Clear support and resistance. So at this degree, right, things get a little bit easier to read, right? Certainly. And so I have on here, I think we touched on this last week here, or the week before. Oh, so I've got, well, here, let's see what I've got on here. If you wanted to recreate this, it's called the God MA, which I kind of like. It's a bit of a proxy for the Vegas wave. It's the average between the EMA and the SMA, the 200 EMA, SMA, right? And then I've got a 50-period EMA envelope, right? EMA envelope. Right? If you wanted to, look in the community scripts, right? You can replicate this as you like. But just to show you here, let me take the envelope off. So you're just looking at the God MA. Now here's the Vegas wave on top of it, right? So it's very, very close, right? You lose that little nuance when often you'll see the market go right into the Vegas wave. But if you're just looking for broader strokes here, sometimes, now if I put the envelope back on, it just gets a little too crazy, right? It's colorful, well, pretty, but you can't, that's too many lines for me. So in an effort to simplify that, right, in effect, it's a 50 and a 200. And as is always the case with this kind of a moving average approach, trend approach, where do we want to be trading, right? Where we see separation between the two, right? Separation, separation, separation. Now, that's, in addition to that, if you're just looking at it, okay, well, here, clearly, right, you want to be long here. Retrace consolidation here, probably wanted to be short. I'm just looking at the 50 relative to the 200, right? It can be simplified. How would you have done here if you're following the shorting when the 50 is below the 200, long when the 50 is above the 200, short, right? Now maybe you're stopped out here. Well, let's assume you would be. Now you're long. How'd you do, right? If you got stopped out here, and likely you get stopped out at a scratch, right? If you went short here and it comes all the way back here, likely that's just a break even. Now, how'd you do here? How'd you do here, right? Now, you would want to see a full close above. How'd you do? How'd you do? Now, where are we? Right, sometimes it's good to just step back, right? If the Elliott is, we get all, myself included, we're trying to solve the puzzle down at the, the 15-minute level. Often just step back to a 4, a daily, even a weekly, saying, okay, what's going on really? Where's the big picture, right? If I scrunch this up, that's what we've done since, that's January of 21 through, here we are, February of 22. We've just gone sideways. But having said that, right, could you have made money here, right? Just simple, right? 50, 200. Not only could you have made money, odds are you would have had an extremely good 12 months there. Extremely good. Now, the market's not always that friendly, and we tend to overcomplicate things, right? I guess when I was thinking about what I wanted to say here today and how I could make this useful and fruitful for both members and YouTube subs, sometimes just a simplification does wonders for you, right? As opposed to going down on the 3-minute of, fuck, what is that? Is that a flat? Oh, shit, I thought that was a 3. Oh, it turns out to be a 5. This can really simplify, right? Just keep that in mind. Now, would this be enough? Absolutely. Now, could I add some additional things here? Well, of course, I'm going to pay attention to what the algo has done. Of course, I'm going to pay attention to the geometry. But let's not complicate for complicate's sake, right? Do you need to complicate? Right, that's the first question. Do I need to complicate this? Well, so that's going to be my segue into, okay, well, let's come over here, right? Above, below, right? Below, below, below. Oh, okay. Is this truly a change of character? Well, you might have thought that. You might have thought this just off of the market structure, right? So before we get into market structure, let's just look at the 200 and the 50. Right here with a little threatened it. Now, this is more than a threat. That's solid closing above, and then all of a sudden, we get some negative geopolitical news, and down we go. Well, okay, does that kill us here in terms of any potential? Because if you look here at this distance, it looks like, hey, what's the big deal? It looks like you're on your way to a 5. Right, which is kind of what you were thinking, right? So why? What's the big issue? Well, now we get into a little more nuance where you got to decide how much nuance you want to bring into your trading. I mean, really, I say that quite seriously. Do you want to do you need to add complexity? Right, I'm saying that I want you to ask that to yourself, really. Because if you sit here and look at this, it wouldn't be unreasonable to say, well, fuck no, why don't I just do this? Okay, well then it's, right, so it's going to get a little bit more complicated, particularly when you start to cross above and below, which was always the issue with something if you're kind of using moving averages to guide you. What do you do when they get on top of each other or this cross, overcross? Well, now out here at this degree with something like Bitcoin, you don't see that as often. Well, let's see, can we find something? Well, where would it have been confusing? Maybe right here. That's about it, right? And it's just because they're on top of each other. Where's the next time they're on top of each other? Where's there is no time to the right. How about to the left? Last time they were really like, oh, fuck, I don't know what, right there. Did it eventually clarify for you? Maybe you're here like, oh shit, I don't think he's going to cross there. I'm not sure. What's the slope of it? All right, could you have used, what have I got? Do I have anything below? Yeah, I do. Well, here's an RSI. Well, fuck, that might complicate you here, but here's an RSI getting outside of Bollinger Bands and then harsh down. Okay, maybe. All right, maybe you fucked up there. Maybe you had a little loser there. But for the most part, if you stayed with this, you're quite profitable. Now, we're here trying to say, okay, macro picture, God, what is this? Is this going to be a triangle? Don't lose track of the fact that it can be when the market is trending like these. And so, well, let me say it this way. Looking at the big picture, you would say to yourself, well, we're not really trending. We're just going sideways. Yeah, big picture. But there was plenty of money to be made here in between, right? Just lower the time frame. Well, let's go from a 4 to a 2. Right? Are we trending? Right? Is this a trend you can trade? Is that a trend you can trade? Yeah, I think so. Well, now it gets a little trickier here. So now I go from a 4 to a 2, and all of a sudden there's more areas here where it's like, oh, well, shit, I don't know what's happening there. Oh, what about there? All right, I got a little distance here. All right, see, you shorten the time frame, all of a sudden this gets, shit, I don't know. What are they doing there? Is it going to cross? Is it going to cross? Well, obviously not. Oh, is that enough? Do I need to be getting long here? Oh, I'm not sure. Should I be getting long here? Right, so my point, I mean, if I went down to a 1 hour, right, you're going to see it again, right? It just gets more and more complicated. There's more confusion here as we get down to lower and lower time frames, which is a nice way of me bringing you back here saying, not only is the Elliott easier to see out here, but something simple like trend identification or what side of the market do I want to be looking on, you get to 4 and above, it gets a little easier. Now here, right, so this was confusing at the 2 hour and the 1 hour. Okay, maybe a little congestion here, but are we confused here, right? Well, look, it's going up to the 200, 200. Now, there's the cross. Right? Are we confused here? Well, maybe there's hesitation here. Okay, it's confusing on the 1 hour, but not confusing out here, right? This is a gift. right? From the God MA, right? We're not really getting a threat to go through it. So all that happens up here is just a liquidity grab, right? They're just grabbing liquidity before they send it down. Who's getting raped there? I talk about it virtually every video, right? Retail's buying that. Oh, breakout, let's go. How do I know, right? How do I know? Look what comes off of it. Same shit every day, right? They fall for it. They never fail to fall for it. Never, right? You can count on it, right? Retail's going to buy that, right? Retail's going to sell it. Retail's going to sell it. Retail's going to buy it. It's just over and over. There is no time or done. You can always count on them to do it. Them. It's us. Like, I'm retail. Well, you're retail. We're all retail. Unless you're with a bank or a hedge fund or some major institution. We're all retail. But so when I say that, I'm not disparaging it. I should say it this way. Less experienced traders who know that they're vulnerable here. It's not that a breakout never happens. Obviously, look at that. There's a breakout. It's just that you're vulnerable here. So why put yourself at risk? That's really, at the end of the day, that's what I'm saying. It's now, of course, right? Somebody sold it here and had a hell of a day. So my point is never to say to you, don't take a breakout. My point is, it's not a great place to enter the market, right? Because you're vulnerable to this. Now, in hindsight, it looks like, well, look, shit, okay. Well, here I've got a little indicator here that identifies breaks of market structure. So there's the break of the market structure. So these are the lows, they break, it's a free fall. Now, did you know that was coming? Right? Probably not, right? But I guess what I'm trying to get to is if you wanted to be short here, this is a dangerous place to make that decision, right? So let's look at it this way here. Right now, did you want to be selling right between the 50 and the 618? Okay, in hindsight, right? Of course, it works out, right? This is what you were thinking. Oh, wait a minute. Now, what might have kept you from doing that? Right here, because you're so focused on, oh, wait a minute, what did the algo do? Where is it? What did it do? Oh, okay, well, there's a golden zone. I'm at the 50. I got a double bottom down here. I can probably long that. Right? It would have been very easy let's do it this way. Very easy. Oh, okay, I think I see what's happening here. Oh, this is corrective. We've had this big swing here. Oh, we're correcting. Looks like let's see if I can put the whole thing together to see, right? Okay, so I think I can do this. Okay, so we've had a swing. We've come back to a 50. Oh, here, look, we're in this prior congestion here, prior support zone or prior resistance. Hey, maybe that's the support. Oh, look, I got a swing. I got a retrace. Oh, I'm right at a 50, between a 50 and a golden zone. I want to take that because, hey, that could go. Right? I know the algo is going to participate there. Why? Okay, again, why would you not take that trade? Right? You hear me say that all the time. Well, first, okay, does the structure support it? Well, in actual fact, it looks like it would. Right? Because it looks like you might have, let's just keep it simple. A, B, C. Right? Oh, well, wait a second. If that's A, B, C, would that make sense? Well, so think about it for a sec. Right, from an Elliott perspective, if I'm coming off of this low, right, and I've gone 1, 2, 3. Oh shit! Here, let's redraw it here because that's an expanded flat. If I did this, okay, and I've got 1, 2, 3. Let's bring this down. Okay, so you'd be thinking 1, 2, 3. Okay, would that work? Right? Let's just I'm doing this on the fly. I didn't really mean to go here. Okay, so I'm long enough. So 1, 2, 3, A, B, C. Oh, yeah, that could work, right? So, and that may be a trade someone looked at and took, right? God, I sure hope you put a stop on it. But that would not have been an unreasonable. Here, let's label it. Right? You might have been thinking, 1, 2, 3. Whoa, God, did we get away with that? Yeah, I think we did. Yeah, as a matter of fact, I'm about to step on my own storyline here. Okay, so we don't overlap. Right, so 1, 2, 3, 4. Why not? Right? Why would you not take that trade? Let's get this cleared up. Okay. Oh shit! There's a way to do this here. I never do it. Let's go right there. Okay. Why would you not take that trade? Well, from a pure Elliott perspective here, I'm not necessarily suggesting that you might not want to have been looking there, but the only thing now I'm going to do here, just to, say it's always a little bit more. Oh, let's see here. Let's really do it right. Oh, well, we can go with that. Oh, there'd have been this here as well. Oh, let's do this. Kind of do it that way here. So we'd have been thinking, oh, the 1 and the 3, already got that one. So we'd be thinking 2 and the 4. Okay, 1, 2. Why would you not take that trade? I'm not necessarily saying you shouldn't, or that you shouldn't have been looking there. But the only thing now, right? A long way to get there. So here's the only thing I'm going to put back on that. Now I'm going to put that back on that. Oh, where'd you go? Oh, I don't want you. I want. Oh, I don't want you. I want you. Okay. Right? You're thinking 1, 2. Now, this is where you got to be disciplined. And there has to be, I don't want to say this. There have to be some rules that you go by. All right? So now this would have been, this is a tricky one, right? So oh shit, it looks like you could have done this as well. So let's finish it. So you could have gone, hey, God, I did not mean to get off on a tangent here, but here I am. All right, so you're right here. So I've got 1, 2, 3, A, B, C into the 4. I don't overlap. Well, the Elliott might have gotten you in trouble here, right? So if we take the Elliott off, what would hold us back from taking that trade? Oh, what have I got there? Oh no, that's an order block. I want that off. Okay, so 1, 2. What would have held you here? It's like, well, not so sure. Where's the 50 to the 200? Now you can say the same thing down here. Look here, same thing in the 2, right? The 50 is below the 200. Right? Do you see? Right. So in this case, you get there, right? So yeah, of course, right? So that one flies. So you come off of this. Now, what's the difference here? Well, would you want to be a buyer here? It's the exact same setup, exactly the same, right? Come here. You've got the gap between the two, just like you have the gap here. Right? It's just the gap between the two. We're not there. What did we just talking about? So where do I want to trade this? When I've got this nice gap between the two. Right here, the gap is implying down, right? But it was also implying down here because I'm not over. Price is not over. What's the difference? Price it makes a straight line, straight shot to break the 200, breaks both of them. Okay, now here's the difference, right? So you must say, hey, I know. This is, again, you got to have some rules here. Okay, so this is a simple one, followed by many traders, institutions, banks had fun. Because it's so simple. Okay, when the 50 is below the 200, I'm only looking for shorts. Now here I can start looking for longs. Now right here, so you would have been thinking right here, well, shit. Okay, well, this is the danger, right? Which is why you got to be careful about this, right? So you could come back here and say, well, I did it last time, and look at the major winner I got out of that. So I'm just going to do it again. Well, this is actually even a difficult example because you didn't. If you thought you were going to get that, you'd have been waiting. Oh, maybe I get a little pullback here, and we get right so where they're on top of each other back to this structure, and then we go. But once it went, this was the next time that you got to pause, and even that was very shallow. So you might have been thinking, oh, 1, 2, 3, 4. Oh, is that the retrace I'm going to get? Okay, what'd you retrace to? Right to the 50. Look at the gap between the two. Now all of a sudden here. Now do I want to take it again here? Well, where's the 50 to the 200, right? We've got nice gap. Now here, all of a sudden, different story here. It's a different story. So here it's tricky, right? And this, you're gonna get used to you're gonna get stopped out often, right? You have to be. So the risk reward here is actually quite good. God. Damn, I didn't mean to get stuck here, but here I am. Okay, so let's say you're going for first target. All right, so let's use the 786. Well, there's 4 to 1. So it's not that it's a stupid trade. It's really not. That's not what I'm saying. Let's just use that here. So, we got a little break. So you might say, okay, I've got a little push up here. I've broken the regression channel, so I'm going to take the next retrace back to the golden zone because I'm looking for that on my 3. Am I still here? Let's see if I can do this. Test, 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 test. Let me stop. Okay, let's look in there. Okay, so what's happened in here? Let's get you out of there. Okay, so right now, as we're sitting here, we're thinking, 1, A, B, C. 1, 2. Let me keep going here, see if I can get this to show us. Okay, well, oh shit, I wanted to go back 1. On this bar, so you're stopped out right here. So you lost, oh shit, what did we get there? From 55.7 to 54, right? So, okay, that's going to sting. I mean, that's going to sting. But now, assuming you didn't go balls deep with leverage. Okay, so maybe that's a nice way to say it. When you're considering the trade where the 50 is below the 200, just because of that fact alone, let's consider reducing the size here, or maybe not going with leverage until you get the confirm, until you get at least the price action. You would want to see a close over the 200. That's going to pull the 50 with it. Let's go back here to our example here. Here's the push, right? Now, this pulls the 50, so right here. So if I do it this way, right here, now I'm through. Now I'm through and I've crossed. Now, it doesn't, here's the retest, retest until here, but look at the gap that I have. I still can be leaning long because the 50 is well above the 200 and price action is well above the 200. Now this starts to change. Now, if I'm going to take this trade here, I've got to pay attention to the fact that, wait a minute. Momentum is implying to me that I need to see some confirmation before this goes, because I got to get above the 200, or if at least I need to have a close above the 200, and maybe that pulls the 50 with it as it did back here. But right, that's not what we get. So immediately, you're going to take the stop here, right? And that's going to sting, right? I mean, shit, you can't get in here and play and expect not to get hit. You're going to get hit. So, okay, ouch. Now, so I guess this is a very long-winded way of getting back to, all right, now if you stepped back and reviewed your trade, would you, well, hopefully you'd have some sort of a, what do I want to say, filter, gauge, barometer here of trend strength. And the 200, because so many use it, is an excellent one to use, right? Or 200 or 233, Vegas Wave, there's just some reference to where's the trend. How can I determine where we're going? Well, shit, of course, what comes after that, right? So the break here, a great example of, good God, I hope you had a stop on it, right? Particularly if you're going to take that trade with the 50 below the 200. I mean, did you get rejected there? Whew. Right, so there's a great example of saying, well, let's give it plenty of room. Maybe you're after third target. Let's give it to the POC because I'm very bullish. Well, I got to get out of the way, right? I got to get out of the way here. That might, maybe we're going to come down and test that low here, so I want to give it plenty of room. Well, that's not the way you make money in the markets. All right, so I don't even remember what happens. Let's get that off and get it back to real time. Okay, so here's where that was happening, right? Are you glad you had to stop on it? So I think I made that point. Have some reference, right? If you want to just use a 50 and a 200 EMA, fine, right? You don't have to be fancy here. I just think these are kind of cool, right? Now, I don't want the 50 to be a line. I kind of like it as a zone, right? Here being a good example. What are we doing? The one thing I know here is that the 50 is above the 200, right? The one thing I know here is that the 50 is below the 200, and here. Now, here's the change of character. I got way sidetracked there. Holy shit, 34 minutes. Okay, let's try again. All right, let's come back to where I was ultimately going. Oh, I've got something else on here. Let's get that off. Okay. I've got a lot in here. Okay, so we're looking at this. Right, I'm trying to reduce the Elliott. Okay. All of a sudden, now note here, right? So this is this is a long way to get here. Where's price is below the 200. Price is below the 50. But where's the 50 in relation to the 200? Right? So what do you do here? Well, of course, one thought is no trade. Right? Until we get clarity here, because this is mixed signals. Is it not? Well, and the Elliott count that was here that we were looking at prior to, well, you know, drums of war, we were thinking, oh God, okay, one, oh, that's a little funky, but okay, 1, 2, oh, nice. Oh, fuck, all right, this is a little squishy here, but oh, nice. Oh, let's keep it simple. Oh, let's go ahead. Let's go with that. Oh, nice 3. Here's the retrace. Now, if it was going to be a classic, the beauty that you hope for, right? You were looking for it right there. Right, this wasn't a, you know, it was there though. Shit, I'm on a 4-hour. I mean, there's a 3 in there. Oh, there's absolutely a 3 in there. Right, so you might have been thinking, okay, I got it, I see it. A, B, oh fuck, come here. A, B, C. All right, oh, you could even done it this way, right? Many here, in fact, I had it done that way. Right, so there's a diag here that I talked about that last week. Mecha Tataku had nailed that. So 3, 3, right? We expand the B, so because there's a 1, 2, 3, 4, 5 in there. It can be done, but it's a squish to get that to finish as a 5. But it can be done. Okay, ABC. Oh, you might have been thinking, oh, there it is. Oh, now, right? So this was all there, right there. But there were so many tells here that I'm trying to get to. It's taking way too long to get there. Oh, if this was the A, B, C here, and we were looking here, this from the 2, if this was going to be the 2, and this was the 3, oh shit, I got the wrong one on there. Let's get this one up here. So we're at between the 38 and the 23, we're right in the 50, we're above the 200. Like that was ripe to go. You had all the structure. It was just right, all right there. Ready, 1, 2, 3, 4, at the 38, at the 50, up we go. Oh, here, oh, looks like we're going to get it. It was looking good, right? I was watching it, right? 3, oh, 4, oh, we're going to get it. Okay, so the first tell was we didn't get a new high there, right? If anything, now when this started to get in trouble is when we broke this structure here, right? This is our last little, if this was going to be 1, 2, 3, 4, on this break, things started to get ugly. Now, hopefully, while I was just talking, you recognized where we are right now. Right? So you'd be back here thinking, oh, wait a minute. Okay, could this still play as 1, 2, oh, fuck. Let's do it this way. 3, 4, 5. Here, because it can be done here, and I'm trying to simplify. I'm trying to not make it more complicated. Oh, hey, wait a minute. That's a 3. What's the problem? Why isn't this good? Well, it may be. It may end up being good, right? So then that's oh fuck. Let's get this out of here. Oh, it gets a little dicey in here, but on the subdivision here. But in the broader structure of things, well, okay. So number one, there's a few tells here that are problematic. Oh, come here. Well, one, this is sideways, this is sharp, but the length of time here, it's not that it's not possible. It's just not what we'd prefer, right? Now, of course, the market doesn't always give you what you'd prefer, right? But that's what we'd be doing here, right? Now, could it do that? Well, sure. Yeah, it could. It could, right? It seems at this point a bit less likely here because of the size of this, and some of the subdivision here is questionable. And ideally, we'd rather not see the 4 pivot at the golden zone. It's a much better fit for a 2 than is a 4. Now, so you could look at that and say, well, who fucking cares, man? So there's the golden zone, there's the target. Why are you not taking that trade? Well, you might. I mean, that wouldn't be a dumb trade. I mean, God, I'm all over the place today. So if you took that, right, with a relatively tight stop here, worst, you're right, you might use the pivot of the 1, right, the proposed 1. 6 to 1. What's wrong with it? Well, I'm not. It's not so much that there's anything wrong with it as it's not what I was just trying to show you. It's really not what we wanted. We wanted it here. 1, 2, 3, 4, 5. That's when it looks right here. Now, so immediately you'd say, well, wait a minute. If that's a better 2, can I finish it? Can I make it a 2? Well, you could, right? So you could go 1, 2, 1, 2. But again, I don't like the structure because I can finish it. I can do it this way. Oh, I've got a destination in mind. Bear with me. I'm gonna get there eventually. Okay, I know it's a little choppy in there, but let's think about this, right? So right off the bat, you're like, oh shit, I don't know, the 4 to that 2 doesn't quite seem right. But wait a minute, maybe I got to rethink this. Maybe the 2 is actually over here. So let's consider what that would mean. That would mean that I'd have a 1, 2 in here. 1, 2, 3, 4, 5, right? So that could give me the subdivision. Oh shit, I've got it somewhere. Oh, let's take that off here. Okay, and all of this is I'm trying to help you deal with this right here, right? So I've simplified, right? I've got a swing, I've got a retracement, right? This is what we talk about. That's all the market ever does. That's all it can do. That's all it can do. Swing, retrace, right? This breaks, right? That's it. We're not going to go sideways forever. One side's going to break eventually. Same thing here, right? It's just this is all the market is. That's all it can do, right? There's a swing, retrace, one side breaks. Swing, retrace, one side breaks. Oh shit! Let's see, where do I have it? All right, let me try and get full circle here and bring this in so it makes sense. All right, let's start with this one. Okay, so if this is going to be 1, 2, well, could I get there? Oh, 1, 2, 3, 4, 5. Right, little diag here to get me started. It's a little sloppy, but it's doable. I think it's a 5, 3, 5, 3, 5 actually. Right, if you go down, I'm on a 4-hour. If you go down to a 30-minute, you'll see it a little clearer. It's a 5, 3, 5. So 1, 2. Well, what else could I put on that? Okay, well if that was 1, 2, 3, 4, 5. Okay, now it looks. I'm reducing some of this. Well, by doing this, I'm reducing the size of the 2. Right, so it starts to fit a little bit better, a little bit. I still have more time here. It's sharp, right? So again, it's not a rule of alternation. It's a guideline, which means it's not a rule, which means it's, sometimes it's there, sometimes it's not. Rule of thumb, how about we say it that way? Okay, well, so if I've got a completed impulse here, 1, 2, 3, 4, 5, well, I completed something. Could it be 1, 2, 3, 4, 5? Yeah, I could. Could, right? So we can't eliminate that possibility. Do I want to be a buyer here? Well, we just kind of long-winded way and a long distance to get here. Where's price in relation to the 50 and the 200? Well, it's below the 200. So here, I like the buy, right? Price is in the 50 zone. We're above the 200. Off we go. Now, mixed messages here. Again, one choice is no trade. But then you circle back and you say, well, wait a minute, man. Swing, I got to retrace in 3. Why would I not want to trade that? Well, we're going to get there eventually. So if this is a completed impulse here, and I got to account for all of this, what's an alternate here, right? In the context of what we're trying to do here. If it's ABC, it's very reasonable to have completed a W here. ABC could have completed an X. Now I'm looking for, because if this is going to hold as a triangle, I'm looking for a 3. All right, let's see if we can finish this. Well, if I've got a completed impulse here, let's look at the internals. Let's look at the length of the 1 projected from the 2. Right? Looks just shy of the 2618. Beautiful. Let's go back to, where have I got you? Okay, what's the alternate, right? So if it's going to be a 3, A, B, 1, 2, 3, 4, 5, A, B, C. All right, let's do the same thing on that swing relationship from the low to the proposed A, if that's what it's going to hold as an A, and that's the 2. What do we do? Right in the pocket. right, for a C or a 3. That's why it's a great example, right? You did at the we didn't know it was either, it's always right. We never know, right? Is it an ABC or a 1 2 3, right? How do we know? Well, you never know, right? And it's just only a function of how you're reading what's come before it. That's the only clue you get. That's context, and there's certainly no guarantee that means that's what will come off of that, obviously. But I've got a pretty good contender here. So I like the swing relationship between this swing, and this swing, right? It's right exactly what I would be looking for in that relationship. So while this still can be a 4, I think what's more probable here is that we're in the process of doing now at this time, right? So remember, counts change all the time, right? If we're going to do it this way, it fits just as well as what we were looking at before, 1 2 3 4 5 to an A, B, C, into a B, to a C, right? We're just going to get there. It would seem a little bit differently at this point in time. And part of that is a function of, okay, well, let's just say that over the weekend, peace breaks out and there's not going to be any conflict, and we start to rally. Well, number one, that's a big assumption, right? I mean, when you have that level of impact to the planet, right? So, I mean, if we have military conflict there, that's going to disrupt the markets, right? So we know that, right? Which is why the markets are on edge. The stock indexes are. Oh, it's not a crisis here, but the sell-off yesterday, you see the reaction to it, right? The market knows that's going to be a problem. So could this be a WXY going? I'm starting to like that all the more. Now, there's a couple of interesting things here. So again, remember, the idea is not to trade this, because if it's 1, 2, 3, 4, and 5, no problem. We want to be long. If it's A, B, C, and this is, we're coming down here, we're putting in our X via an A, B, C. I want to be long here, right? Because I'm looking for the A, B, C, and the Y. So either one is giving me the suggestion here that I want to be long. What's the problem? Where's price in relation to the 200 and the 50? Now, the 50 is still above the 200, so you can make the case here, trend is still up. We're just testing the downside. I mean, here, we're just testing the price structure. We can do it that way. We're just testing the structure. I'll probably pull it off here to this. We're just testing. How's the water? Let's see how it is, right? There's a bunch of new volume coming in. What do we got below? Ooh, right? So the RSI has just, this is the TDI, right? So this is slightly different. I use a 32 and a 68. Just lipped around. Now, that could easily fall over again, right? We could do this and then come down. But, right, if it crosses that midline, starts to go, you're going to start to look a little bit better here on the idea of a long. Again, we want price to get above the 200, right? That was why we went through all of that explanation of getting here, because we're in an indecision zone. Price is below the 200 and the 50, but the 50 is still above the 200. What to do here? Well, that would be a confirm at this point, right? If we got back above it. So what is here? So the question you always ask yourself, why does it stop there? Why does it stop there? Low volume node? Is there some swing relationship here that maybe you've got algos responding to? Okay, maybe, you passed the 100. Okay, could be. Maybe it's something on a lower time frame. Maybe it's some geometry. Well, when I've got here, just again, basics operation. I've got a dominant low to a dominant high. I've got a retrace. I kind of want to measure that, right? Wouldn't I? Right? I mean, what's the algorithm going to do here? Dominant to dominant. Oh, where are you? Oh, I think it's this one. Okay. So if this is the B here, and we've gone 1, 2, 3, or A, B, C, or 1, 2, 3, 4, 5, and so I've got this is the B and this is the C. Where did I just retrace to? I know what you're thinking. Wow, so many coincidences. Well, what else is there, right? Would that be enough? Well, of course, that's a secondary pivot, right? That's on the idea, oh, if this is 1, 2, 3, 4, oh, well, I made the golden zone. Hey, what if it's ABC and it's ABC? Well, I'm at an area here where I might anticipate some support. No guaranteed, but I can understand why it stops there. But that's secondary. How about dominant to dominant? Oh, shit, I got it here somewhere. Now, it's a little harder to see, so where are you? This one here. Let me take that one off. Okay, that's swing low to swing high. Now, let's make it from the secondary pivot. Do we understand now why it's stopping there? It's not price action. It's not anything related to moving averages. It has nothing to do with anything other than that algorithm. That's it. That's why it's stopping there, right? So we can understand. Now, of course, right, I have to, because people, that does not mean we can't break. Now, remember, from dominant low to dominant high, I'm at the 50. I still got a golden zone down here in the middle of all of that structure, right? In all of this consolidation here. So this could very easily break. But what I have here is confluence. Now, if we were looking at this thinking, oh, A, B, C, right? Let's keep it simple, right? Do I have a 5 that completes there? Well, it's kind of tricky to get it to work just right here as we go down to some smaller time frames. I've got it here, but I'm not sure we want to complicate things. The point I'm trying to make here is that I can understand, what do I have here? I have a technical pivot. Do I want to be a buyer off of that? Well, that's kind of what I was suggesting earlier. Well, maybe, but I want a little bit more to happen here. At the very least, I want to get the price above the 200. Now, maybe I come up here and I hit my head at the 50, and then there's a little bit of a retrace. That'll pull the 50 down a little bit. And then I'd like to see that start to go here where I can be buying with price above the 50 and the 200. Here being a good example, right? So here, you get below. Now we get back above. Now here I've got a spread here, and I get that pop. Right, short-lived, right? It doesn't go, right? That was the 1, 2, 3, 4, right? You thought, oh God, it was perfect, right? It was all set to go right here, right? It was ready to go. Russia. Okay, so where are we now? Well, we know algorithms drive it, right? So that's why it stops there. Now there is some good news for bulls. Excuse me. Let's come back here. God damn it, this was getting too long. I got sidetracked early on. All right, so with that. We've got that established. Let me hide these again. All right, so there's the, oh fuck, where'd you go? Let's hide. Oh, here, I know I'm going long. Okay, so here, this is encouraging for bulls. Now this level here, we talked about this a couple of weeks ago. We know why. Again, same thing, same reason we stop here. Why do we stop there? Right, here's the last pivot before we go down. Bang, 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 3 times in the golden zone. Can't get through. Second target. Well, if you were looking here, you might say, oh, well, okay, well, clearly they used that. So let's bring it down. We know they used that. We want to use the same thing they used. Little break. Right, so this would be the encouraging news for bulls. Right, which would set you up here again. No guarantee this holds, but it sets that up. So you have because of that, slight advantage to bulls. Even in the face of the negative news, the price below the 200, if we start to come back up here, this is more likely to break on the second. Well, it's broken twice here, right? So higher probability, right? That algo is not there anymore, right? So we know if we can get going here, we're not going to run into it again until we get higher. Hang on. Sorry, fucking allergies. All right, let's get that off here. I'm trying to wind it up here. All right, so because we broke here, we know they used it, we have to go to the back to the next pivot that we know they used, right? Which is this one. Right, because that was what gave us this structure here, right? We know they used that. Now that's a secondary pivot, but because we know it was used with precision, we want to keep it there. Now eventually you'll have to go to that one, to that one, to that one. You got to break all of them. But right now, where am I? Well, it's not hard to spot that, right? Okay, look, low volume nugget here, right? Where there's been no business, right? So we went right through here, didn't stick for long. So this is clearly a technical level to the market that, you know, we can identify just from the low volume node. So now we're coming back down here. Now, are we going all the way down? Well, of course, this algorithm here has a target down here. We can't eliminate that, right? That would blow the count up here. Now, if we're going that far, things are getting ugly, right? If we were to go get this, that's 27 and change. Think what that's doing here, right? If we get to 27 and change, we're 27 and change here. We might get back down to the. We might get down. Let's get to 27. There's 27 and change. We might get right back to this interception here of the. We might come back to this median line. This is the upsloping parallel, right, to the big one. We could come back to this. You'd still likely be looking at this as a flat. You'd have to turn this into a 5, and you'd have remarkable, I mean, just mind-blowing geometry confluence there. But we don't need to go there yet. But you can see, if we start to break here, that's a reasonable target, right? And you know, right, what's driving it is an algorithm, right? Because they're short here. They're going to stay short until this one of two things happens. Either they get that target or they break this golden zone. Of course, right? Then we go to you'll have to go right to the next one, right? It'll be right there. Then you have to go right to the next one, right? You got to break that one. And then eventually it's not clear until we break that one, which is at 56 and change. Got to get that one, right? And what is that right there? That is the highest probability location for the D wave, of the triangle at the golden zone from the high of the B. So this is tricky, right? A lot has to happen. So what we're trying to do is get a long to set up. But before we take that long, we want at the very minimum price above the 200. Now you're in between, right? Now it's a bit of a judgment call. So there's gonna need to be more there, right? For you to take that now, clear the 50. Okay, now it starts to get more interesting because if we're gonna get a 3 here, we got to get, you know, either an A, B, C or a 1, 2, 3. We got to get started here. So the implication is we need to break the structure. So we need a swing. We need a higher high, higher low, higher high. Right? We got to get started on this process here. So there may be an opportunity here. So if we get, let's do it this way. So if we start to come up off of this, if we start to come up, we want maybe a 1, 2. Right? So ideally you'd break that. So you get a little break of structure, and then you're into the 3 or the C. 4, 5, right, or both, pardon me. That would need to be a 3, so we'd need to do it this way. A, B, C. So where's the trade, right? If you're with me on this and you're looking for the idea of a 3 and you're saying, okay, well, that makes sense to me. Where's the trade? Well, I would suggest not here, even though it's technical, right? Again, 50 and the 200. What do I get here? If I get that, where's the trade? Boom, right there. Right in line with all that structure. Right, that's where I would take it, right at the high volume node. So show me the 5. I'll take the B. Now you might, right? If I'm on a 4 hour, you get down to a smaller time frame, you get a swing here, and we go down to a 30-minute, you get a 5, right? You get something to suggest, we're starting into the 5 that I'm looking for here. 1, 2. You could take that, stop under the pivot, into the 3, 4, 5. Anticipate that we're going to get a retrace, right? You may or may not want to stay through that, but ultimately you're not looking for a push to new highs. You're looking for a test of that, right? So this would be your target. So you're looking for a push from 44 and change to 55 and change, right? It's a 10, 11K move here if you got in that. Now, that would be the most conservative way to do it. Right now, go down to a 15-minute, you'd find out probably got 25 trades in there. Do you want to do that? That's partly what you got to ask yourself, right? Remember where we started, and you go down to these lower time frames. Whoa, man! All of a sudden, it's way more confusing. Oh fuck! Look, the 200 is, where are we? Wait, oh, price is above the 200, but here, good example. Price got above the 200 here, but oh, the 50's not there. Do I want to be a buyer here? Right? We know what's right there, right? We just looked at that. That's the golden zone, right? So, great example, right? Do you want to be a buyer here? Do I want to be a buyer there? Right, with prices, we're in between, and I'm at a golden zone. Do I want to be a buyer there? Maybe not. Right? Who's going to buy it there? Right? Only someone who doesn't know that golden zone is there. That's the only explanation, right? You would triple top, well, likely inexperienced trader. Okay, so we're all the way over here. God damn, I'm going so long today. 3. It looks like we're doing 3, 3, 5. Okay, let me wrap up here. God. Oh, let's go back down here. A couple things. Right. Now, if this was 1, 2, 3, right, we would have been looking for median lines to guide us. Oh, God, I think I got it all of them here. Here we go. Oh, let's look at the first one. Oh, let's look at this one. Okay, so if I were... God, do I have that locked? No, I don't. Okay, so let's say I thought this was 1, 2. And I thought it was 1, 2, 3, and I thought this was the 4. Right? Remember we looked at that early on. Okay, so 1, 2, 3, 4. Oh, beautiful. Oh, look, I put the median lines on there. Oh, if I get that center line, I know there's 80% odds there. Well, right? Did we get right here? That was, if you were going to get there, that was the trade. Right? What's always a threat, right? We have to keep this in mind. Yes, you had 80% odds here. Absolutely. But that's not 100%. That's 80%. So there's always a concern of trading principle number 4. Failure to get to the median line sets up a move equal to or greater than the swing that failed to get there. Right in your face. Well, let's say you thought, oh, wait a minute. What if I went down here? Any different? Well, what if I redrew it, right? And I said, okay, well, wait a minute. I know here, right here, I'm at a golden zone. Oh, shit, where'd they go? Right? So do I have a golden corner? Well, remember, that's golden from this pivot here. Right? So do you have a golden corner here? Abso-fucking-lutely. But it's a secondary pivot. So why would you consider taking that trade, right? So if you wanted to take it, right, the only reason to take it with price below the 200 and the 50 is because the risk is so small and you know you have the confluence there. That's the only reason you might consider taking that. And I'm not suggesting you take it. I'm just suggesting in the thought process, do I want that trade? I do have a golden, but it's a golden off a secondary. Now, if we go back to where we were, which is if I add this, now I've got a corner. Right, so, oh, shit. Let's get that one hidden. Oh, hide. What happened? Hide. Okay, now, from the dominant to the dominant, I'm at a 50. So I have a corner pocket, not a golden, just a corner, right? Still 80%, right? I've done a nice ABC into that. Now I'm dominant to dominant. I have a little more conviction here, right in the structure. Look at the risk reward there, right? And again, I'm not saying take this. I'm not taking this. But if you were, hungry for a trade, the risk reward there is very accommodating, right? Very. Trying to get just that. Trying to get to the median line. It was 8-1. Oh, assuming you got, so you tick it right there, right? You're going to give that just on the other side of this pivot here. Oh, there's 5-1. I could probably tighten that up a little. Well, 5.6 to 1, right? And that's assuming we're just going to the median line, not to the algo target. That's 8 to 1. Let's just use median line. There's 5.3 to 1. Something to think about, right? So, and again, I bring you back to what's the hesitation? Where are we, right? I much prefer, if we were above the 200, that's a slam dunk. I take it 100 out of 100 times. Here, I'm going to wait for what I want to see. I want to see this. And additionally, because of the drums of war beating in the background, that one I would take, assuming I get a 5 here. I'll wait for this one. Right, knowing trading principle number 4, if I get the median line, trading principle number 4 is off the table. Now I'm just working off of the geometry, right? Oh, swing, retrace in a 3. Yeah, I'd take that. I get everything covered there? I think I did. Good God, this is like the longest video I've ever done. I don't even remember what that is. But that's the one from the top. All right, so hang on. Here, I'm going to wrap it up here. Here's the target we're looking for. Right, for our triangle to play, that we'd get between the 50 and the golden zone here for the high probability for the if it's going to be WXY to get into the D of the, here I've got an ABC on that, to get into the D of the triangle, right? So could we do it here? WX, right? We're going to get A, B, C. That's what we're trying to do. Well, as I said, right, I'm reluctant here, especially again with what's going on in the background here. But if I get a 5 off of this, so whatever stabilization, whatever fucking bullshit, okay, fine, give me a 5, right? So let me know here some of that threat is reduced. Okay, right, now I'll wait for the 3. Now you got to recognize in doing that, it's more conservative. You're risking that running off on you, right, because of all that confluence. You might say, well, if it drops here, I'm not going to get stopped out. Well, right. Guaranteed way to make sure you don't lose money. Never play. You'll never lose. All right, I think I got that covered. All right, so hopefully what we did here was give you some guidelines here. Just something simple, like trading for dummies, a 50 and a 200. All right, let's be mindful of the gap between them when there is one. Here's a good gap. There's a not sure gap. Right here, right, when you're here and it starts to break and you break that structure and it starts to go, that's a trade we can take comfortably, right? There's no, oh, I'm not so sure. Well, we're not here, wait a minute. Right, and it will do that often. There's no hurry here. What is the hurry? What is the hurry? If this is going to happen, we got a long way to go here. We're out April, May before this potentially gets set up to complete the triangle, right? Again, possibility is we're going to go down here, we'll do the flat, right? But there's all sorts of possibilities here. There's no rush. So why do you want to be long in an asset that we know is vulnerable to geopolitical risk when we got geopolitical risk? I'm not saying get out of your Bitcoin. I'm just saying, do you want to add here with leverage and go hard on the long? Well, you say, well, no, I'm going to sell it. Really? You're going to sell it right into a 50? Yeah, I think war's coming. I think they're going to do it. So I'm going to sell it. Really? You're going to sell it right at a 50? How about a golden zone? You're going to sell it right at a golden zone? Really? You better have a lot of conviction in that. See, if you wanted to do that, right, I'm not saying don't short it. I'm just saying don't enter here. That's if you know it's there, you are literally putting a loaded gun to your head. If you know it's there. Now, most people who short it there don't know it's there. But if you know it's there, that's suicide trading, right? You want to let it break. Oh, now I short it, right? Is my price worse? No. Did I confirm the break? Yep. That'll take. Just simple. Sometimes simple is often the better answer. All right, holy smokes. I did not, God, I thought it was going to be a half an hour one today. Well, there we go. Okay, lots to chew on there, guys. I hope you get a little nugget or two out of it. This is going to be very interesting. I think it's a hold, right? Again, I keep coming back to, I'm not worried about missing anything, right? So are you? Are you really worried about missing anything? I think most people at this point in time are worried about missing the sell. Okay, fine, right? Just don't sell it right there. Right, but, well, shit, do what you like, right? I would encourage you to think long and hard before selling it right there. All right, guys, that's all I got. We'll be back on Monday for live streams Monday and Tuesday, and then my partner Monte Crypto does his on Wednesday. Those are getting lots of traction, a lot of great, very original content in there. So be sure to catch those either live or on the replay. Oh, well, I think that covers it, right? Any of the tools, any of the things that interest you are underneath the video in that link tree. It's give you links to Motive Wave and some of the other tools that we use, as well as access to the website where you can join us for free. I think most of you know that here. You can come in, take the white belt, get yourself started, get in the community. Lots of ways to participate with us if this kind of TA appeals to you. Okay, guys, with that, I got to stop here because now I'm hungry. Okay, you guys have a good afternoon. I'll talk to you on Monday.